All right, that is Romesh Sobti, the man of the moment right now, as we're awaiting some more clarity on the quarterly earnings for IndusInd Bank that just came out. It was a decent set of numbers given the fact that it has been the first quarter with the amalgamation of Bharat Financial. On the asset quality front as well, it was a fairly decent set. You had the profits, which came in well above what the street was factoring in. And even, the overall provision number on a standalone basis did manage to improve quite significantly. The stock price currently quoting at about 1,546. Remember, we're watching out for management guidance. What do they deliver on their credit costs? The provisions towards IL&FS as well as some of the other stressed accounts. The street needs clarity on that. Outlook on growth as well as their profits post the merger with Bharat Financial. The view on the CV book as well, that's going to be very important as we were discussing this morning, and their exposure to that, their asset quality, particularly on that front, because we've seen quite a slowdown in the CV space. So watching out for all of those details this time around, as well as maybe some internals by way of the net interest margins, etc. But it's been a solid set of earnings. Remember, the stock has yesterday priced in perhaps a decent set, which is why it rallied quite furiously. NII has come in at 2,844 crore rupees. That's been pretty much in line with the absolute gross NPAs as well, standing at about 4,200 crores. In fact, why don't I get in a voice on the technicals? Kunal, come in on IndusInd Bank. We've been talking quite extensively. Now the numbers are out of the way at 1545. What do you think?
So I think if the numbers are out of the way and the stock breaks this, 1555 this day's highs hurdle today, then I believe that there could be case of a decent turnaround for the stock price. Volumes, of course, would be on the higher side because of the results or the event expectations. But I think net it has to cross the 200-day moving average, which is above 1550. That should be a sign of confirmation of a trend reversal.
I think we're good to go now. Should we cut across to the management?
The quarterly declaration of results. I think the headline for us is the completion of the merger. The long-awaited merger finally crystallized and came into effect from the 4th of July because it was a material event. After 30th June, the results got consolidated, and what we have presented, what has been uploaded on the sites is the consolidated limited audit results of both the entities put together. And I'm very happy to welcome Mr. M.R. Rao, who I'm sure you have met in his past avatar as CEO and MD of Bharat Finance, who sits on my left, to the management team of IndusInd Bank. And I'm sure during the course of this thing you will have questions that we'll be more than happy to answer. So the merger process is complete. The shareholders of Bharat have been allotted the shares of IndusInd Bank, and as of today, those shares are also trading. So we, in record times, have actually achieved the trading of the shares of the new shareholders of IndusInd Bank, who were erstwhile shareholders of Bharat Finance Limited. In terms of the results, I think quarter one has been marked by strong quarter-on-quarter growth and year-on-year growth, both consolidated and, of course, standalone numbers. The consolidated PAT growth is 38%, and the total PAT that we have declared is 1,433 crores. This is against the 336 crores of PAT that were shown in quarter 4 of last year. So I think all lines have moved up. Net interest income has moved up by almost 34%. Fee income has grown by 28%. Total revenue has grown by 32%. So pretty strong quarter in terms of headlines. And of course, the balance sheet also has grown nicely. We have a 28% growth of the consolidated balance sheet. And if you look at standalone, then IndusInd is at 26% growth. And we've had another very strong quarter on deposit growth, which followed by the 29% we showed in quarter 4 is now 26%. And within the deposit growth of 26%, retail fixed deposits have grown very robustly at almost 42%. We can go into individual numbers, but I'll give you headlines. The merger has contributed into a much stronger capital adequacy for the bank, which, if you include the Q1 results as well as the promoters' preference capital, which came in actually on 4th of July, is now nudging 16%, 15.8% to be exact. And before Q1 profits, I think last quarter, I think it was in the range of 14.28%. So there's a pretty strong bump up in the capital adequacy that has happened. I've already talked about revenue growth, 32%, NII growth, 34%. The core fee that we always define has also grown by 20%. The cost to income ratio has actually fallen from the 44% that we normally show to 42% as a consequence of this. There's a 2% drop in the cost to income growth. If you look at the growth vectors, then amidst all the news that you hear about slowdown in the passenger vehicle segment, our vehicle finance businesses grew by 24%. And this was a pretty secular growth. It was spread across commercial vehicles, two-wheelers, three-wheelers, utility vehicles, tractors, off-the-road vehicles, etc. Very, very secular growth. And that's happened because we have taken solid market share. So that's a stellar performance which is coming from our vehicle finance businesses. The 26% growth in loans is mirrored by almost a mid-25s growth in the corporate book, 24% growth in the vehicle finance book, and in the 20s, the growth for the non-vehicle finance book as well. Other than that, I think what has been talked about most in the market is the quality of the loan book. The quality of the loan book is absolutely stable. Our net credit cost came at 15 basis points, which is well in line with our overall ambition of keeping it in that 60-65 basis points range. So I think we are back to the business as usual as far as credit costs are concerned. Accompanying this is probably one of the smallest and the lowest books that you have on the structured book. That is only, I think, 5 basis points? Structured book, 8 basis points. 8 basis points. The restructured book is only 8 basis points. We did disclose for the first time, I think, SMA data last quarter. We are happy to disclose SMA data. Maybe we should show you that. We, I think, were amongst the first to disclose SMA data sector-wise, and we will show it again this quarter. Last quarter, I think we had shown SMA2 as 0.32%, very low, and this quarter SMA2 has actually come down to 17 basis points. Even SMA1 is down to 18 basis points. I think we are showing definite improvement in the SMA figure. I think the SMA data is a fair indication of what actually happens in your books. And so I think all the speculation that has been happening around what you have in the books and what is bubbling and what is not bubbling is sort of put to rest if you look at the data, not this. No, the sectoral SMA data. Yeah. So that's the data, the sectoral data. And if you see that in none of these you're showing any sort of I think overall, as I said, SMA1 18 basis points, SMA2 17 basis points, and that too is spread across some 48 accounts. There's no concentration risk that a lot of people have been talking in the market. The other part of this thing is on customer acquisition. Customer acquisition, the overall customer base is now at 21 million customers, and we onboarded during the quarter 6 million customers. That's right. Now that's largely because of the Bharat Finance inclusion within the results. What is happening there, I think, is, and MR will talk more about it, is that each one of those 7.5 million active borrowers in Bharat Finance is being attached to a savings bank account. So we are putting a whole lot of, and this is completely paperless, digitized opening of savings bank accounts. So the entire 7.5 million by the end of the year or financial year, hopefully, will have a savings bank account behind it. The rate at which we are opening these accounts are between 40 and 50,000 accounts per day. That's happening. So that's a pretty rapid sort of savings bank initiative that we have launched in the rural areas on the back of the large base that Bharat Finance has. So the overall customer base is 21 million. The branch opening initiative has continued. We have crossed 1,700 odd branches, and I think we are well on target to get to our 2,000 figure by March of this thing, including what we call banking outlets. We have 65 of those banking outlets already. So that's a summary of this thing. In terms of the Bharat Finance businesses, we have seen a AUM growth of 26%. And that's essentially maybe you will have to try the sort of approach we are taking, especially in a couple of states where we have actually slowed down cautiously.
Thank you, sir. So, two topics I'll speak about the AUM growth and the savings account piece. While we grew 26% year on year, the quarter on quarter growth has been kind of flat. Essentially because we took a conscious decision to tighten the lending norms in a few states because we think that there's some overeating there, especially in the states of West Bengal and Odisha. So we on our own tightened the lending norms and the criteria that we typically apply. So therefore there has been a dip in the business in this quarter. However, the customer acquisition, fresh customer acquisition continues to remain good. We have acquired about 8 lakh customers in the quarter one, and typically the first quarter is a dull season for microfinance business. The ramp up starts happening from Q2, Q3 onwards. On the savings piece, I think one of the biggest reasons for the merger is that we'll be able to provide the total financial inclusion services to the borrowers of the rural space. As a NBFC MFI, we can just address their borrowing needs. But with the savings account, we are giving the borrowers an opportunity to park their small savings, whether it is 10 rupees, 50 rupees or 100 rupees in this bank account. And we are creating a network of Bharat Money Plus stores where the customers can actually go in and do their cash in and cash out. It's a human ATM equivalent in the rural space. We've got about 3,000 stores now in different villages in Odisha and Karnataka. And to our pleasant surprise, it's just not only the borrowers, but the non-borrowers are also using this to cash in and cash out from their saving account with other banks. So I think that's the way forward for us. We are also encouraging our borrowers to park their small savings, because with these Kirana stores near their residence, hop, skip and jump, they can go and park their whatever surplus money they have instead of keeping it in their house. The whole savings account opening piece is the 30 seconds to 1 minute process. It is entirely paperless and is based on Aadhaar. And as Mr. Sobti was alluding to, yesterday we opened 44,000 accounts, and pretty soon, I think in the next 1 week or so, we'll start hitting a run rate of 1 lakh